If you've just moved to Canada or you're about to, you've already been handed the list. Get your SIN, open a bank account, get a credit card, file your taxes. That list isn't wrong, but here's what nobody tells you. The list is pointed at the wrong danger. The mistakes that actually cost you, they don't happen in your first 30 days. They happen in month 13 because of what you set up in your first 30. Here's the thing every newcomer guide gets wrong. They treat your first month like a checklist. Tick the boxes, you're done. But these decisions don't end when you make them. They keep charging you quietly for years. Take the bank account. It's free until one day it quietly isn't. And most people never notice the moment it flips. That's the pattern. And it's not just the bank, it's the credit card, it's your taxes, it's how you send money home. 5 setups, 5 quiet costs that show up long after you've forgotten you chose them. None of these are hard to fix, but almost nobody does because nobody tells them. So let's go through all 5 in the order you'll actually face them and exactly how to diffuse each one roughly your first 30 days. Let's start. Week 1, the first real move isn't the bank, it's smaller than that. You need a Canadian phone number, a cheap prepaid SIM is fine, no contract, no credit check. It feels trivial. It's not, because almost every step after this, including the one we're about to do, asks for a Canadian number to send you a code to reach you. Now the actual first step, your SIN, your social insurance number, 9 digits, you can't be legally paid without it. And the account that's actually worth having needs it too. Here's where the quiet cost hides. You can apply 3 ways. In person, at a Service Canada office, you typically walk out with the number that same day. Online, and the government's own guidance says it can take up to 15 business days, by mail longer. 15 business days is 3 weeks on a calendar. And here's the part nobody connects. Until that number exists, almost everything else is frozen behind it. The good bank account, the credit card, the clock on your credit score, not even started. The person who goes in on day 3 is weeks ahead of the person who files online and waits for the exact same number at the exact same cost, free. So if you can go in person, go in person. That's the whole move. Week 1, part 2, SIN in hand, you go open a bank account. And this part is easy, almost suspiciously easy. Every big bank has a newcomer package. They're built to say yes, no Canadian credit history needed. That's not luck. You're a customer they want. What you bring depends on how you arrived. If you're a permanent resident, your PR card or your landing paper, the COPR. If you're on a work permit, your passport and the permit. If you're a student, here's the one people miss. Bring your student ID or proof you're actually enrolled. The student package is priced on you being a student. Show up without the proof and you don't get the student rate. Same bank. Different door, depending on your status. The account opens, feels like a win. Here's the quiet cost. That newcomer package is free for 12 months, then month 13 arrives. The fee that was waived switches on, and depending on the account, that's somewhere around $15 to $30 a month. Nobody emails you, your free year is over, it just starts. Most people never notice. Call it $200 a year, every year. For an account, a no-fee online bank gives away for nothing. And here's the trap inside the trap. The reason you picked the account was probably the welcome bonus. A few $100s one time. The fee is the part you didn't compare. The bonus is bait. The fee is the cost, one time versus forever. The fix costs nothing and takes 30 seconds. The day you open it, set one reminder for month 11. Decide, stay or leave before the fee starts. That's it. We did a full breakdown of which newcomer account actually wins last week if you want the deep comparison. But honestly, for today, the account barely matters. What you do in month 11 does. Weeks 2 and 3, now the credit card, and this is where newcomers lose the most time without ever seeing it happen. 2 paths. Most newcomer packages come with an unsecured card, no deposit, no Canadian history required. If that gets declined, and it can, on a fresh study permit or thin documentation, there's the secured card. You put down a deposit, usually a few $100s. That becomes your limit. Here's the part that matters. To the credit bureaus, both cards look identical. Both build history exactly the same way. Decline for the first one is not a dead end. It's a 6-month detour. Then you convert. So you get the card. You think the credit job is done. It just started. And here's the quiet cost. Paying on time is the engine. That's what actually builds the score, but the size of your limit is a brake on that engine. If your limit is small and your real spending fills most of it every month, that ratio quietly holds your score down, even when you pay every cent on time, every time, same person, same habits, same money. The one who knows this crosses into good credit territory months earlier than the one who doesn't, and those months are not abstract. They're the difference between a car loan that isn't predatory, a lease without a cosigner, eventually a mortgage rate that isn't a punishment. We broke down exactly how the score machine works in our credit score video and how to pick the right card in the Cobalt one, links below. For today, the one thing to carry, the limit they hand you isn't just a number, it's a speed setting. And if you had strong credit back home, look up Nova Credit before you settle for a starter card. It can sometimes carry your history over for an Amex on day one. Most people won't need that, but the ones who do never hear about it. The fix, use the card, pay it in full, and at month 6, ask for a limit increase, or just keep your spending well under the limit on purpose, free, one phone call. Month 1, taxes, and your instinct is going to be, that's a next April problem, file it under later like everyone tells you. Here's the trap. By default, that instinct is correct. Do nothing, and the government only starts your benefit payments once your first tax return is processed. So picture this, you arrive in February. You're not required to file until the following April. That's over a year where money you were eligible for, quarterly payments, and if you have kids, monthly ones, just doesn't come. Not because you were ineligible, because the system was waiting for a return you weren't required to file yet. But there's a form almost nobody tells newcomers about. It's called RC100MFED1. The Canada Revenue Agency built it for exactly one purpose, to start your benefit payments before you file your first return. The GST HST credit, now bundled with the Canada Carbon rebate on the same form, you can apply the week you arrive. You don't need to have filed. The form takes about 20 minutes. If you have children, use the RC66 instead. It applies for the Canada Child Benefit and the GST HST credit together. One form covers both. The reason most newcomers get nothing in year 1 isn't that they don't qualify, it's that nobody hands them this form. One honest note. Canada changes these rules often. Names, forms, the application method all shifted in just the last couple of years. So whatever you do, confirm the current version on canada.ca before you rely on it. As of recording, this is the path. Every other mistake in this video you can fix late. The months of benefits you don't claim in year 1, those don't come back. Month 1, still, first payday lands. And for a lot of newcomers, the first thing you want to do is send money home to family, a loan back there, rent you're still covering. Now, most people sending to India, the Philippines, Nigeria, places like that, you've probably already figured out not to use a plain bank wire. You're on Wise or Remitly or Western Union or MoneyGram. Good. That's step 1. And you did it. Here's the quiet cost almost nobody catches. The trap moved. It's not the bank anymore, it's the word free. A service shows you 0 fee in big letters, and you feel like you won. But the fee was never where they make their money. It's the exchange rate. They hand you a rate that's quietly 2, 3, 4% worse than the real one, and that gap is invisible. There's no line item. The money just arrives smaller on the other end. Run the math on a habit. Step back, look at all 5. The sin you delayed, the bank fee that switched on while you weren't looking, the credit limit quietly breaking your score, the benefits you didn't claim because nobody named the form, the exchange rate skimming every transfer home. Not one of them announced itself. Not one of them happened on the day you made the decision. Every single one was invisible, delayed, and set in motion by something you did or didn't do in your first month. That's the whole point. The danger was never the first 30 days. It was the first 30 days. Quietly wiring up everything that bills you later. And every one of them was diffused by something small. A reminder, a form, one phone call, knowing where to look. So here's the checklist, the actual thing to keep. Screenshot this. 1, get a prepaid SIM, then your SIN in person if you possibly can. Same day beats 3 weeks, and everything waits on it. 2, open the Newcomer account with the right documents for your status. Then, the same day, set one calendar reminder for month 11. Stay or leave before the fee starts. 3. Get the card. Secure it if you have to. It's the same to the bureaus. Pay in full. At month 6, ask for a limit increase or keep spending well under the limit on purpose. 4. Don't wait for tax season. Look up form RC 151, RC 66 if you have kids. Apply for your benefits the week you arrive. Confirm the current version on canada.ca. 5. Every time you send money home, ignore the advertised fee. Check the real rate. Compare the landed amount. Pick the winner for that country and that amount. 5 setups, 5 reminders. That's the difference between the newcomer who gets quietly billed for years and the one who doesn't. It was never about the first 30 days. It's about the 5 things you set up in them. If one thing sticks, make it this. In Canada, the expensive mistakes are the quiet ones. The system rarely tells you when a free year ends, when a benefit went unclaimed, when a rate skimmed you. Knowing where those quiet costs hide is the whole game. If this helped, subscribe to Rethink Normal. Once a week, breaking down how money in Canada actually works, especially the parts nobody explains to newcomers. Quick, honest notes. This is general information, not personal financial advice. Your situation is your own. Everything here is accurate as of recording, but Canada changes these rules often. Confirm the current details on official sources before you act.